Thanks for joining. Before we get started, please click subscribe to my channel and check out a message from our sponsor, The Motley Fool, where you can get the top 10 stocks to buy right now. We've seen a lot of headlines that malls are dying. That's been a big theme ever since e-commerce really started to take off, a decade and a half ago. But is it really the case? Are malls dying or are the bad malls dying? And Simon Property Group is the biggest mall owner in the world. They're truly an international company. Tyler Crow is joining me, and he lives in Tbilisi, Georgia, and there is a mall right next to him that's owned by Simon. So Simon recently reported its earnings, and I got to say the numbers tell me that the malls are not dying. Simon's occupancy is up to 94.9%. That's compared to 93.4% a year ago. It's getting more rent from its tenants because its retailers are selling more on a per square footage basis than last year. I went to a Simon mall last Christmas season, so Christmas season 2021, and the malls were packed then. And it looks like they're doing even better now. Retailers are sold more in the fourth quarter of 2022 than in the fourth quarter of 2021. So a lot of that is because of COVID comps, the capacity restrictions have been lifted, things like that. But the fact that more retailers are opening up stores in their malls is very, very encouraging. The company's doing a great job of adding value to its properties. I know Tyler mentioned that his Simon-owned mall has some very unique features. I know a lot that I've been to have high-end restaurants. They have entertainment venues. I took my kids to a Medieval Times in a Simon mall. There's the one in near Baltimore has a casino in it. So Tyler, are malls dying? What is your general opinion on Simon as a business?
No, I don't think malls are dying at all. You just have to go to a mall, at least a good one, and realize that that's not really the case. Of course, if you're going to like some what are they, Class B mall that's got a rotted out J.C. Penney as its anchor tenant, yeah, of course it looks like malls are dying. But you go into premier Class A things that like Simon is doing, and it doesn't look like it's the case. Now we've kind of gushed about Simon here, and as you said, like rising comps because you get a percentage of the retail, having high occupancy is going to be a good driver for them. But the one thing that it really has me curious is what are the next needle moving moves for Simon? The redevelopment pipeline is kind of slow. They don't have a lot of new development going on. They have one in Tokyo that they just completed. And 2022 FFO per share was up like 3.8%, and it's estimated to be flat for 2023. And so I'm really wondering, like, as wonderful as the business is, as me as the investor wanting to put new money into it, where I struggle to see too much upside. Has a decent valuation, 5.8% yield is the last time I checked it. So not bad, but in a high interest rate environment, that's not a huge premium for what looks like relatively modest growth opportunities.
Well, I'll push back on that just a little bit. The big reason you're seeing flat year-over-year FFO growth is not because of the core mall business. It's because of all the retailers that Simon acquired out of bankruptcy along with Brookfield. They acquired JCPenney, which you mentioned. They acquired Forever 21. They acquired Aeropostale, however you say it. They acquired a bunch of different retailers out of bankruptcy, and those haven't been doing quite as well as expected. They're doing well. I know they're putting in a new leader in the Forever 21 business is one of the bigger opportunities out of those. So that's a big drag on earnings right now. FFO growth would be a lot better if it weren't for that side of the business. So that's one. Another thing is the market's kind of has a little pessimism because they are one of Regal Entertainment's largest landlords. As we know, Regal's parent company, Cineworld, recently filed for bankruptcy. A lot of Regal theaters are in Simon malls. That's one of the ways they attract people to their malls. But one thing that I think the market's missing is that Simon would love to have that space back. If Regal decided to break some of its leases with Simon, it would hurt in the short term, but overall it would be a net positive. It's like when Sears closed all of its Simon-owned stores And then Simon put amusement parks and casinos and all kinds of attractions that actually bring people in other than to shop. It would be something that it would be a space that they would like to have back, especially since theater attendance has been declining for a while. So it would be kind of a way to invigorate some of their malls. And number 3, you asked what their next growth lever is. I want to say keep an eye on their outlet business. Simon's more well known for its high-end malls like the one near you and the ones I mentioned that have casinos and stuff like that in them. But they're also the dominant leader in the outlet space, which is a relatively small type of retail that's growing very, very fast. Retailers, especially the struggling ones, are slowly realizing that it's a more economical way to increase their physical presence to have an outlet store, which is a more low frills building, than to have a space in a high end mall. So I'd say the outlet part of the business is worth watching as a next growth lever. I'm looking at their development activity right now, and their biggest development project is an outlet property. So that's something that's worth watching. I don't know if you have. I know you're a Tanger shareholder, which is the number 2 in the space.
I am a Tanger. I am not Simon, just kind of for the reasons that I mentioned. But those are some pretty good reasons. I'll take another look. But hey, there's a reason there's a market because some people disagree.
Once again, thank you so much for joining me. Be sure to click subscribe if you don't subscribe to my channel already. And as always, this video is sponsored by The Motley Fool. Be sure to visit www.fool.com/Frankel to receive the top 10 best stocks to buy now.